everyone, and welcome to today's live training. My name is Daniel Ladd. I'm a business retirement strategist, and today I want to share with you a powerful strategy that most business owners have never heard of. Now, if you're a business owner and you're tired of losing your best people to competitors, this is specifically for you. Now, I'm going to show you an IRS-recognized strategy that turns your bonus dollars into what I call golden handcuffs. And this strategy makes your key employees think twice before leaving your company. Now, before we dive in, let me quickly introduce myself. I specialize in helping business owners solve one critical problem. That's losing their best people and having to replace them at enormous cost. And I focus specifically on tax-eliminated growth strategies that create golden handcuffs for your most valuable employees. So now, if you're watching live, please drop a comment. Let me know what city you're watching from. I love seeing where everybody's tuning in from. And if this is your first time joining one of my live trainings, welcome. Now, make sure to follow the page so you don't miss future trainings like this. Now, today's topic is something most CPAs and financial advisors don't even know about. So if you stay until the end, you're going to walk away with knowledge that gives you a serious competitive advantage. So let's dive in, right? So let's start by talking about the retention challenge that every successful business owner faces. Here's the statistics that might shock you. Losing key talent costs 3 times their annual salary. Think about that for a moment. If you lose someone making $60,000 a year, it's costing you $180,000 to replace them. And that's just direct costs. That doesn't include loss of productivity, the training time, the impact of team morale, or the knowledge that walks out the door with them. Now, most business owners try to solve this with cash bonuses. But here's the problem with cash bonuses. 30 to 40% gets lost to taxes immediately, and there's no guarantee your employee stays after receiving that bonus. And the traditional benefits have to be offered to all employees, not just your key employees, right? Now, your retention dollars aren't creating any lasting loyalty for you. Now, drop a comment if you've ever given someone a bonus only to have them leave a few months later, right? I see this happens all the time. And you invest thousands of dollars into bonuses and your employees still getting poached by a competitor. And it's frustrating and really expensive. But what if I told you there's a better way? What if I told you there's a strategy that creates the same tax deductions for your business, but actually creates loyalty instead of just hope? Let me show you exactly what I mean. Let me show you a difference side by side. Now, on the left, you have the traditional $25,000 cash bonus, right? And here's what happens with this approach. Your employee keeps around $16,500 after taxes, right? That money sits in taxable accounts where it gets taxed again on any growth. There's no retention guarantee. They can take the money and leave, right? And you're required to offer the same benefits to all employees. And their money is exposed to market losses. Now, look at the right side, right? This is the Section 162 strategy. Your employee owns $25,000 growing asset. That asset has tax-free growth forever. Now, vesting schedules create golden handcuffs, and you can discriminate and offer these only to key employees or key people. And it's protected from market downturns. As you can see, it's the same cost to you as the business owner, right? Now, but dramatically different outcomes for retention. Now, one approach hopes your employees stay loyal. The other approach makes it financially painful for them to leave. Which would you rather have? Drop a comment and let me know cash bonuses or golden handcuffs, right? Now, I think the answer is pretty obvious, right? Let me show you exactly how this works. So let me walk you through the exact steps on here. As you can see here, it's really 3 simple steps. Step 1, instead of giving a $25,000 cash bonus, you pay a $25,000 premium on a specifically designed life insurance policy for your key employees. Step 2, you get the exact same tax deduction as if you paid them cash. But here's the difference. That money becomes a personally owned wealth asset that grows tax-free and gives them access to cash when they need it. Now, some of you might be thinking, Daniel, this sounds too complicated. But it's actually simpler than you think. You're already giving bonuses to your key people. You're already taking tax deductions for those bonuses. The only thing that changes is instead of giving them cash that disappears, you're giving them an asset that grows, an asset they own and control, an asset that becomes more valuable every single year. Think about it this way. If you give someone a $25,000 cash bonus today, what do they have in 5 years? Probably nothing. The money gets spent on bills, vacations, or day-to-day expenses, right? But if you give them this strategy, what do they have in 5 years? A growing asset worth over $120,000 they can access tax-free. Which employee do you think is more likely to stay with your company? The one with a spent bonus or the one with a growing asset? And let me show you the specific benefits. So from your perspective as a business owner, here are the 4 key advantages. First, same tax deduction, right? The cost to you is no additional money versus a cash bonus. You get the exact same tax benefit. Second, selective implementation. Unlike most employee benefits, you can offer this only to your key employees. You don't have to give this to everyone. So you can discriminate and only reward your most valuable people. Third, golden handcuffs, right? Through vesting schedules, employees lose benefits if they leave early. This creates a real financial incentive for them to stay. Fourth is your powerful retention. The assets become more valuable over time. Unlike a cash bonus that gets forgotten, this grows year after year. Your employee sees this value increasing and knows they'll lose it if they leave. Now, let me show you what your employee gets from this. Now, and from your employee's perspective, here are the benefits they receive, right? They have a zero market risk. They never lose money to market crashes. While everyone else is worried about their 401ks going down, your employee's money is protected. Now, you get tax-free growth, money that compounds without tax erosion. Unlike traditional retirement accounts, this grows completely tax-free. Immediate access, no age restrictions like 401k plans, right? Now, if they need money for an emergency or business opportunity or major purchase, they can access it immediately. Now, tax-free loans, they can access money while it continues to grow. This is like having their own private bank. And they also get family protection, tax-free benefits in terms of death benefits for their loved ones. So if something happens to them, their family receives money tax-free. Now, drop a comment if you can see why employees would prefer this over a cash bonus. Now, this gives them security, growth, and flexibility all in one package. But here's where the retention power really kicks in. Now, we can structure this with either options depending on your preference, right? We can do a 5-year vesting, which means 20% per year. This is simple and straightforward. Most companies do that. Now, 10-year vesting period means 10% per year. This creates longer-term retention. Now, here's how this works. If your employee leaves before they're fully vested, they forfeit the unvested portion. So if someone leaves after 3 years on a 5-year schedule, they keep 60% and forfeit 40%. This creates a real financial incentive to stay. Like imagine you're an employee with $50,000 in an account. A competitor offers you a $10,000 raise. But if you leave, you forfeit $20,000 in unvested benefits. Are you really going to leave for that $10,000 raise? Probably not. And this is how you create true golden handcuffs. Now, let me show you some real numbers. So let me show you what this looks like with these real numbers. If we implement this for one of your key employees with $25,000 annual contribution for 5 years, here's what happens. After 5 years, they built $124,000 in accessible cash value. By age 65, this could grow to over $400,000. And they can borrow against this money tax-free for any purpose. And if something happens to them, their family gets full death benefit tax-free. Now, think about this from a retention perspective. Your employee sees this account growing every single year. Year one, 23,000. Year two, 48,000. Year three, 74,000. Year four, 102,000. Year five, 131,000. Now imagine they get a job offer from a competitor. Are they going to really walk away from this growing asset? Especially if they're only 50% vested in and would forfeit half of it. This is retention power that cash bonuses simply cannot match. But let me address the tax question directly, right? So now I'd be completely transparent about taxes. Yes, your employees pay income tax on $25,000, just like they would any other bonus. I want to be crystal clear about this. But here's the key difference. With a cash bonus, they pay tax once, then they pay tax again on any growth. With a Section 162 strategy, they pay tax once, then it's tax-free forever. Same initial tax, but vastly superior long-term benefits. So let me put this in perspective. If you give someone a $25,000 cash bonus, they keep about $16,500 after taxes. If they invest that money and it grows, they pay taxes on the growth. With this strategy, they pay the same initial tax, but everything after that is tax-free. The growth is tax-free. The access is tax-free. And the death benefit is tax-free. So yes, there's an initial tax, but the long-term benefits far outweigh that cost. So let me show you how to implement this. Here's exactly how we implement this strategy. Step one, we design a custom strategy for your key employees. And every business is different, so we tailor this to your specific situation. Step two, we handle all the compliance and carrier setup. And you don't have to worry about the technical details. We present the benefits to your selected employees. We make sure they understand the value of what you're giving them. Step four, we implement everything with ongoing support. This isn't a set and forget it approach. We monitor, optimize the strategy over time, and the entire process typically takes 4 to 6 weeks from start to finish. And once it's implemented, it runs automatically. Your employees see their accounts grow, they understand their vesting schedule, and they have a powerful reason to stay with your company. Now, let me share who this is perfect for. So here's the key questions. Which of your key employees would you include in this strategy? Because this is perfect for business owners who have 1 to 5 critical employees they can't not afford to lose. People whose departures would significantly impact your business. And if you're watching this and thinking about a specific employee right now, this strategy is probably a perfect fit. Now, I want to be clear, this isn't for everyone. Not every business qualifies. Not every employee qualifies. There are specific criteria that needs to be met. But for the right business owner with the right employees, this strategy is incredibly powerful. And if you'd like to explore whether this could work for your business, here's what I like to do. I'm going to offer a complimentary strategy session to a few business owners who comment retention below this video, or text me retention at 321-282-6801. Again, that's 321-282-6801. And during the session, we'll review your specific situation. We'll identify your key employees. will determine if you qualify for this strategy. And if you do qualify, we'll design a custom plan for your business. This isn't a sales call. This is a genuine strategy session where we'll explore whether this approach makes sense for you. But I can only do this for a select amount of business owners because these plans are labor intensive. But yeah, comment retention right now or text me at 321-282-6801 retention. So if you're interested, drop that comment now. And if you found value in tonight's training, please share this with other business owners who might benefit. The more business owners who know about this strategy, the stronger our business community becomes. Thank you for joining me tonight. I look forward to creating powerful retention tools for your key employees.